We are back.
We are back.
Beautiful. So I've been waiting for this segment for like a year since we started the show. I'm Tom. She's Vanetta. He's Tony. And
he has told me about you for years, for years and years.
Well, so let me introduce Karen. And the only reason I'm not giving out last names is because I just don't want people reaching out to her, because I know respecting your privacy, and also because
you want to keep it for yourself. We got it. It's not a big deal. Listen, I understand.
Thank you.
You're welcome.
But
I'm the one that's excited to be here.
Beautiful.
I mean, wow, this is very impressive.
Well, I mean, we have known each other indirectly for probably 10 years, meaning that she knew me before I knew her. And it wasn't until some point probably about 3-4 years ago where somebody said to me, "Hey, who is this woman?" Okay,
And why hadn't she run yet?
No, and look at the risk that she has on, that kind of thing. And we're like, okay, we better figure out who this person is. So let me tell you the story, because this is great. And thank you so much for coming in. And this is a story I've been wanting to do for a ridiculous amount of time. And you fill in the blanks for us.
Well, I'm learning a lot. I didn't know you looked at what we were doing.
We don't until it pops up on a radar screen.
Okay.
And the funny thing in the brokerage business is we really don't. People think like, oh, we look at individual accounts, but what most brokers do is they just do a scan. They have risk monitors, and they do a scan, at different points, different standard deviation move to figure out, where the risk kicks in. And for big traders, everybody pops up. I used to pop up every day. For about 20 straight years. So it happens.
Get called into the principal's office when you're a market maker, and they understand what you have on here. You short a couple of units. You familiar with that? Yeah, I understand the concept.
I'll buy some units.
Right.
So Karen, your story is amazing, and it's inspiring, and we have tens of thousands of listeners that they're dying to hear this. So I'm going to start off right at the beginning. And you correct me if I got anything wrong, just so I can fill people in. You were the either CFO, accountant for a small business, and you guys were brick, right? It was
Brick and mining.
Brick and mining.
Brick and mining.
Nothing to do with the financial side.
No.
And I always have this saying, I have this crazy saying, which is next thing you know, you're 50. Okay? which means most people, Karen, they start.
So we're going to talk about your age now, Karen,
Okay,
as we're going with this.
okay.
I'm glad you're going to be here about 20 minutes.
Like I said, weight's off limit. But we'll talk about my age.
People, like, one of my pet peeves is that nobody gets involved in investing when they're young. And all they go through, they spend 10 years, 20 years, whatever it is. And next thing you know, they wake up and they're like, wow, I've accumulated some money, but I don't really know what to do with it. And so Karen's a perfect story. She's worked for 20 years. You have multiple degrees, and you're same business for the whole time. And all of a sudden, it's about the year 2000. And if I get the story right, your money's being managed by an advisor at Merrill. And let's just say around $100,000 to be fair. And she has some liquid assets outside of that. She attends a preview. One of her friends drags her to a preview for Investals.
Yes.
That's pretty fair,
yes,
right?
That's correct.
And you went kicking and screaming.
And are you crazy? Why would we want to do this? But also just around that time, I remember someone saying, no one is ever going to manage your money and watch your money as well as you are. So that rang true to me. Because over the years, I'd go up, go down. My asset value would increase, decrease. And I didn't feel like I was making any progress. So she and I had talked about trying to do something in business together. So we went to a free Invest Tools seminar. And in that seminar, they were offering what they call a PhD program. And it was $22,000.
$22,000.
Yes. And she said, oh, let's do this. And I said, are you crazy? But she talked me into it. And together, we took that PhD program that took about 1.5 years to complete.
So you walk into a seminar blind in 2002. Now remember, 2002, investor education was really in its infancy. I mean, there was Investools, there was a couple other companies, but it was pretty much in its infancy. And the topic, as far as derivatives go, even though they were probably an upsell further down the road, it was pretty much about fundamentals and buying stock, selling stock, and basic technical analysis, right?
Covered calls, just all the basics. how to read a graph, how to do analysis, phase 1, phase 2 analysis, looking at a balance sheet, looking at an income statement, how to read what a MACD was, what
Green and red
stochastics-
arrows.
Green. All you had to do was look for 3 green arrows or 3 red arrows, and you were going to be rich.
Yeah, but it starts out. It all starts out in the beginning. Remember, this is the wonderful thing about what Investo's. And I know people think it's because I've been thinking about this for the years. It changed the face of online investing and individual. It changed the face of self-directed investors because although in the end, the curriculum had to be changed and things had to be tweaked and things like that. It engaged people. Like you never would have got engaged if you didn't hear some great preview speaker. And they're probably whoever the speaker was probably a wonderful speaker.
Wonderful.
And they engaged you, and they got you to thinking. And now you're a smart person. You figured it out from Now it took a number of years. So let's fast forward now to 2000. Let's go. You said it took about a year and a half to 2 years.
Yes, and I'm really a 10-year overnight success because it took a lot of work. It took a lot of study. It took a lot of doing things incorrectly. But what that program did was it opened doors. It piqued my curiosity to want to learn more. I tried a whole variety of strategies. I thought I was going to be a real technical trader because I have an accounting and math background. So I had 12 or 14 charts I was following in technical analysis. And I did that for a few years and had some successes and more failures than success. But I learned from the failures. That's the important thing, is to not to give up, not to look at, I have failed at this. I can't do this. No, what you've done is gotten closer to a success, because every time I failed, I learned something that made me a better trader and a better trader and a better trader that got me to where I am today.
So you were a little bit of a numbers junkie on your own before this.
Yes.
And then so the business made sense to you, but putting it all together and learning how to make money, that was really difficult.
It was difficult, but if you persevere, it took a lot of time. I see people getting into this thinking it's going to be quick and easy, and it's not quick and easy. It's difficult. It takes time. You have to study it. It's like learning a craft. You have to know the ins and outs. You have to practice, paper trade, do whatever you have to do. Every time something goes wrong, analyze it. Why? What did I do wrong? What can I do better the next time? And it took years, but that built on itself and built a real solid foundation.
So 2002, you opened your first account at Toss.
Yes.
And with $10,000, if I remember.
Yes.
$10,000. And so now I'm going to fast forward to 2007. 5 years. And this is Karen working. I mean, I'm assuming you were a seminar junkie too. You went to a lot of classes.
A lot of classes.
Both Invest Tools and Option Planet classes. And because I know you had heard me speak.
You still working a full-time job then too?
Yes.
So, I mean, you're taking a lot of time, but you're still working a full-time job.
Full-time job.
Well, she was committed to making this work.
Trading at lunch, trading at night.
I know, but I just want to make the point that you didn't just sit in front of a computer for 5 years. You actually had a job that you had to do too.
Yes.
Okay.
So we're gonna take that $10,000 account. We're gonna fast forward to 2007, and at some point in 2007, I don't know how much money was left in the $10,000 account, but in 2007, a light bulb goes off.
Yes.
And the light bulb, something clicked inside of you, and you said, "Okay, now I'm going to take my $100,000 that's being managed somewhere else," which is probably still about $100,000.
Yes, it was.
How did it
So
move?
in 5 years, the professional manager had given you your money back,
Yes.
pretty much.
Pretty much.
You moved it into your trading account, which is a big step up because
Yes.
I'm assuming that's pretty much everything you'd saved over X period of time that was liquid.
Everything that was liquid.
Right.
Yeah.
And you decided to give it a go.
I did. I felt like I was getting into some other areas of my life, and I felt like I could at least make a living off trading. So I retired from my company and decided I would do this to earn a living so that I could go do other things, pursue other things I wanted to do in my life.
This is a bold move because at that point, even though you had a light bulb went off, you had never there was no proof of concept, meaning that you had
yes.
never earned a living doing it before.
No, that is correct. I often say I went to the deep end of the pool and I jumped because I had a confidence level though that had built up over all of that training time and all the practice and the study and work, all the mistakes I had made. I had a decent confidence level that I could make this work.
So here's where the story gets amazing. So from 2007, you move the money over, and now you've got the 100,000, let's just say approximately, and you start trading. And at this point, you've also changed your trading style a little bit. You're confident because you're focusing more on strategies than you are on anything else, and you're believing in a little bit different approach, the short volatility, some short premium, and you turn the $100,000. And remember, 2007 was the year that volatility got annihilated down to like 10%. 2007 was the, summer of 2008 is when the market kind of topped out. And so from 2007 to 2008, you turn your 100,000 into 150,000.
150,000.
Okay, so it's a 50% return, and you support yourself.
Yes, and I've moved into options at that point. Decide stocks are just too difficult to pick. No matter how much work you do, there's such a good chance you're going to be wrong. And moving,
we say it's about 50%.
It's about 50%. and moving more in the direction of non-directional plays, really starting to tap into that. Realizing if I buy a call, I only make money if the market goes up. And I only make money if it goes up a certain percentage because you have to cover the time value loss.
The break-even point, right.
So that's got to be a better way than this. So that was just starting to evolve at that point.
So all of it clicks. So let's just say some point in early 2008. Now remember, 2008, the end of 2008 is the economic meltdown. It's the debacle in the markets. It's the worst time ever to be short premium and to start getting involved in this. So, but your proof of concept works, and you go from 100 to 150,000. People that you're friends with are watching you. They decide, hey, you know what? I really like what you're doing, and they also come on board with you. So you raise a little bit of money, intentionally, non-intentionally, whatever it is, and you build your account size up to more than a few $100,000. Let's say in the total, you start with in 2008 maybe $600,000 or $700,000.
Right.
And so here's the amazing story, because I'm going to fast forward now.
Okay.
I'm going to fast forward through all the market crash, the economic meltdown, blah, blah, blah. We go all the way to 2011, and somehow between 2008, because this is the remarkable piece of story, to 2011, you make $41 million.
Correct.
How are you not a Lifetime movie? I would watch this. This is amazing.
Okay. So and I skipped through 3 years of time, but Tony and I have done this for, at this point, by the same years you're talking about, a lot of years. We're in our mid-20s of doing this, and we've seen a lot of the greatest traders in the world, and
Sure.
but on a professional level. I had never seen a customer before have the kind of, now at the same time you raised additional capital came in. So you went from essentially 100,000 to 700,000 to about 80 some odd million with money that they raised and things like that.
Right.
But 41 million of it are profits.
Yes.
And in a period of time where I think it was a difficult market, I don't think it was a difficult market. It was a difficult market.
Okay.
The worst.
So what the hell happened? Like, I mean, Karen, and we watched it kind of from the sidelines because you were a customer. And when I say we watched it, we would monitor risk like we do every customer. We weren't watching what you do, but you were a phenom. And you weren't exactly like, what I'm saying is most phenoms are, they're 18-year-old phenoms being drafted out of high school.
Right, or they're 50 pounds heavier than you. And
whatever it is.
Yeah.
You don't fit the prototypical
But I got a few phone calls from you where you said, "Are you sure you're watching this?" Yes, we're watching
I have
this.
a very high tolerance for risk, and you were a bigger man than I was many times. That's all I'm going to say. But Karen, because people are wondering, how did you do it? That's what people want to know. How did you do it?
Well, a couple of things. First of all, like I said earlier, really stopped trading stocks. That got us out of the guessing game of, is it going to go up, is it going to go down, and got us out of the earnings season. I really when we stopped playing the earnings game. We got strictly into options, options in stocks, slowly moved over to the indexes. As we moved over to the indexes, then we could play more safely, and then we started strictly shorting indexes.
Shorting premium.
Shorting premium, I'm
Right,
sorry,
yeah,
shorting
okay.
premium. So as we've built this strategy, it's a very simple strategy. So one area that's improved what we've done is gotten simpler and simpler and simpler. We gave up a lot of the technical studies. We watch price and volume are our two main items. We have Bollinger Bands on our charts, but we watch the charts, we watch the movement, and we trade very short, and we're very nimble. So we work off theta, and we're just in and out of the market within about 56 days is about as long as we'll venture out. And we keep pulling that in shorter and shorter and turning these things around, but doing it in a very conservative way, trying to stay safe in all of our positions. My philosophy is once you give me the money, you're not getting it back. So once that premium comes in, we have strategies in place where we do not give the money back. So very rarely, one of the things that makes us successful is the way we manage the account. We rarely lose in a position. Right? It's a rare thing that we lose in a
Now,
position.
when you say that, because you're just playing, it's a straight probability game. So you're going outside, like to what level? Because we teach a lot of different, when we're doing short premium, more like the way you trade, which is kind of wide index strangles, right? That would be the closest, like, if we were plotting it, that would be what it looks like on a plot. You told me yesterday, you stick to three different indexes primarily, the S&Ps.
SPX, RUT, and NDX.
Okay, so the three
Largest.
largest, and you have I'm guessing that your tendency is to go how far, what is, to get to the break-even point or to get to the probability of expiring inside the number, is it 80%, 75%, 85%? Like you're inside of what level?
We're working more of in the, now it's called probability of being in the money.
Right.
Around 5%. We're putting
So you're
positions
at
on
the
around 5%.
two standard deviation move. Okay, so you're basically at a two standard deviation move going out about 60 days.
At the most.
At the
Yes.
most, 56
Yes.
days or
Yes.
whatever you said. So you're at the far ends. You're at the far ends of the curve. You're essentially the same place where the brokerage firms are at. When we monitor risk. So you've been doing this now. So you've had some. Let's talk about some of the market moves during that period. I mean, remember, early 2009 was hairy, and then you had the flash crash
In 2010.
which was May 6th of 2010, which had to be nerve-wracking for you guys.
It was very nerve-wracking. I was practicing my Spanish that day because I thought I would be moving to Mexico very soon. Fortunately, we survived that.
And so you've had some, I mean, it's not like you haven't been tested. In fairness, you've been tested.
Yes, we've been strongly tested.
But I looked at your performance, and the number of drawdowns is very much consistent with your probability of success. And I think that that's the hardest thing for individual investors to really understand is if you go out, let's say to that 95% chance of going in the money, which is the inverse of that is your probability of success. And if you look at your drawdowns are amazingly consistent with that probability of success. So you're talking somewhere between 5 and 10% of the time you'll have a drawdown, which based on, your schedule, you're probably talking about 1 to 2 drawdowns a year, which is consistent with your strategy. And it's amazing how those numbers play
Numbers
out.
work.
Yeah,
They always work.
It's last year we have 2 funds. One fund had 0 drawdowns, and the other one had 1.
That's consistent with the probabilities you're going to. Now, one of the things that you're probably starting to discover now is that the more money you make, the harder it's to make money.
We're
You're
not
close.
quite there yet.
Yeah, you're close.
I've thought about it. I've thought about it. We're still at the point where as the money flows in, we're still successful just increasing the number of contracts
Sure.
that we trade in a position. So it hasn't become difficult.
It's amazing how liquid the markets are, aren't they?
It is.
I mean,
It is.
So let me ask you, because I wish it wasn't as rare as it is. Like, I wish your story I wish we could have 1,000 people in here with a similar story. And there's no reason that we
Why
can't,
right.
because, but I think there's a couple takeaways from this that are so exciting for us. One is that you're proof that anybody can do this, which is awesome. And I mean, I'm not saying it like, I'm not trying to make this into, I'm not trying to say what you did isn't amazing, but you are proof that anybody can do this.
Yes.
And you don't have to be, I mean, we started when Tony was 20 years old. I mean, I was 22 or whatever, or he was 19. I was 22. We had nothing to lose. You were in a very different position, because if this didn't work, I mean, it's not as easy to recover when you're not 21 or 22 years old. And then the other piece to it is the hard work that it took. Like, it really paid off. It was unbelievable. But were you confident all along that this is what was going to happen?
No, this has been an amazing surprise. But through those years, it took a lot of discipline. I came home every day after work and would sit down and apply like at least 1 hour of just concentrated study. I did that night after night after night. So that's what I see the most of, is people that get involved in this think it's going to be easy and it's going to be quick, and it's not. But if you're dedicated and study and practice and learn your craft, there is a great payoff down the road. That is something I've learned over time, is to be patient and really work on the emotional process, because greed and fear are very strong emotional activators in this, and it'll make you do stupid things. Mm-hmm. So you really need to build the confidence and rely on that confidence, and look at what you're dealing with as, how am I going to manage this? Not the, oh my word, the market's falling. Okay, the market's falling. How can I take advantage of this? What happened with me is I stepped back and started seeing the big picture. I got my mind out of the minutia and reading charts and ticking this off and ticking that off, and just pulled back and said, how can I manage this looking at the big picture? What is this telling me? And I simplified it, and the more I simplified it and the more I looked at the big picture, the more successful we were.
Preach the same thing. I wish the show was around then, because we would have shortened your time frame. But it's crazy how, like, you probably thought it was the worst $22,000 you ever spent. And I mean, and she went to North Carolina and Wake Forest. I mean, she has for graduate degree. I mean, you probably thought it was the worst $22,000 ever. And then in the end, that level of engagement, what got you excited, that first preview speaker, whatever it is, kind of, this is what happens. That's why there's so much value in engagement, and you can't discount that.
No, and I've got $22,000 invested in this now. I'm going to make the most of that. But it's just blossomed into so much more, and I've learned so much through this process. You can do this. It just takes patience, and it takes diligence, and it takes a lot of effort.
So as a final
involvement.
As a final wrap up here, Karen is now become a money manager, and you're.
Do you have an account at Merrill Lynch or anything like that? Do you ever speak to that gentleman that you used to have your account with?
No, he's with me now. He's one of my investors.
Awesome.
You know what, Tom? That just about says it all.
That makes me teary eyed. Okay?
I love it when it comes full circle. I really do.
Did he call? Was he on his knees saying, "Karen, can you manage my money, please"?
Pretty much.
I love it.
Hey, you're managing about $160 million, something like that?
Yes.
And between the two funds, she's made about $56 million over that same period of time, which is just, listen, I mean, I know a lot of hedge fund managers and blah, 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 and I've watched a lot of movies and seen a lot of ups and downs. And I mean, you're doing it the old-fashioned way. There's no inside. Mm-hmm. She has no edge here. This is not Morgan Stanley desk, or J.P. Morgan's trade desk trading against their own flow. This is you just doing it in the retail marketplace. You're a customer.
That's right. And our group's grown. We've got 6 people, including me now.
That's
and
awesome.
It's just great. It's the greatest job I've ever had in my life.
It's the best story. I'm ending it right there. It's the best story
Okay.
ever. Thank you so
Thank you.
much. And you are welcome here. The open door whenever you want to
Great.
come in here.
Well, I'll be back.
We'll be back in 90 seconds. Thank you, Karen, for your time. You're listening
Thank-
to Tasty on the Tasty Trade Network.